see a bunch of charts and I do not know how to interpret them, I do not know when the market is buying or I don't know when the market is selling. If this is you, if you are stuck in this situation of not knowing what to do or what the market is trying to tell you, then stick to the end of this video, because in today's video we're going to be dissecting everything about candlesticks, what they are doing, how to interpret them, how to know what they are telling you, whether they are telling you to buy, whether they are telling you to sell. Before we get into the nitty-gritty of today's video, please give this video a like, a thumbs up, and share these videos. Do it now so that you don't forget and get carried away by today's video. Let's get right onto it today. So candlesticks, essentially what candlesticks are, first and foremost, you need to understand something, that this is the financial market, and for every time you purchase something, right? If you go into the store, or if you go into the departmental store, or you go into the furniture store, you go and purchase something, you usually ask for receipts, right? If you walk into the bank and you make a transaction, you make a deposit or you make a withdrawal, you get a receipt, right? Just picture that and put it right here. Anytime you open your chart and you see a series of candlesticks, those are basically receipts for transactions that have been made in the past. Okay, so basically what candlesticks are, I don't want to bore you with the definitions and all of those technical stuff. I just need you to understand what these candlesticks represent. Okay, there are different types of candlesticks, by the way, so you can Google that, but I just want us to focus on the anatomy of candlesticks. When you look at a candlestick, there's something it is trying to tell you. It's trying to let you know what has happened before you entered into the market. Okay, so you may have heard of different types of, there are a lot of them. There are, you have bearish engulfing, bullish engulfing, you have the doji, you have morning star, evening star. That's not the essence of this video. This video, I want us to be able to look at a candlestick and interpret what happened within that period of time. Now, for every time you look at let's go for this very big candlestick right here. Okay, so this candlestick right here is on this chart, by the way, is on a 1 hour time frame. What this means is that each of these candlesticks you are seeing on your screen, it represents all the activities that happened within the last, for each candlestick represents 1 hour. Each candlestick represents 1 hour, because we are on a 1 hour time frame. Let's assume that this is a 4 hour time frame. It means that for each candlestick, it is showing us the receipts of every activity, every financial activity that has happened in this pair within every 4 hours. Okay, so I hope it makes sense. So this candlestick you are seeing here represents all the buy and sell receipts that happened in that particular 4 hour. This is another 4 hours, all the activities that happened in 4 hours. That is if we were to be on a 4 hour time frame. So for each time frame that you set, of course, you can always swap your time frames right here. So for whatever time frame you are looking at, each candlestick there is just telling you, ma'am, sir, this was everything that transpired in the market of this pair, in this currency pair, before you came. Okay, and it is essential for you to know what has happened in the past in the financial market. It is important that you understand what has happened in the past to be able to help you make future decisions, whether you want to buy or you want to sell. Okay, again, in today's video we're not talking about entries, even though candlesticks are going to help you in deciding whether to enter or exit the market. But I just need you to be able to understand what the market is trying to tell you. Okay, for each candlestick right here, for this candlestick right here, there is a series of events that happened there. Buyers were in the market, also sellers were in the market. Now, every single candlestick shows you the strength, it shows you which side of the market had the most strength within that particular time. Okay, now Again, it depends on how you set yours. Some people's candlestick, they choose green and red. I personally like to use purple and black. Some other people like to use orange and blue. Whatever color you want to put, whatever color you want to set it to, it doesn't really matter. What matters is that you are able to identify which one of them represents your bullish movement and which color represents your bearish movement. By bullish, I mean buyers are in control. By bearish market, I mean sellers are in control. Okay, so in this very long green candle here, right, because green in this on this chart you are seeing green signifies that the buyers are in the control of the market, right? Because that is how I set it. You can actually set yours any other you can set yours to any other color that you prefer. It totally depends on you. But all I want you to understand is that for every single candlestick, the market is telling you that a particular side of the market was in control. Okay, there are sometimes it will also, even when the market is in a point of indecision where buyers and sellers are struggling for who will be in control, the market is also going to represent that on the chart. All you have to do is to know how to read your chart. Okay, so let's take an example. Maybe I will have to fast forward this so that it doesn't waste your time. Okay, so whenever you see any candlestick on any time frame, examine it properly. There are four price points that are very important in every candlestick. For a bullish candlestick, again, like I said, I chose green as my bullish candlestick. Okay, yours may be anything else. So there are four price points, like I said, that are very important when you look at a candlestick. Okay, the highs, right? The high, this is which is here, the high, the low, the open and the close. Okay, the high is the highest point that price went to within that period of time. So we are on a 1 hour time frame. Okay, so I'm only saying the highest um the highest price, right, that the market went to within this hour. Okay, this one here says the lowest price that price went to. Okay, now this one here for a bullish candle, now pay attention, this is where it is, where a bullish candle is different from the bearish candle. So for a bullish candle, the opening price, this is where price started from. Okay, so this is the opening price right here, right, and this is the closing price. Okay, so we have the high, the low, the opening price and the close price. Okay, so price started from somewhere below, okay, and then still ended above. Okay, when price closes in a particular candlestick, when price closes above the price it opened at, it is a bullish candle. So it may not necessarily be this size, it may be somewhere down here. Okay, it may be somewhere down here, but as long as the close price is above the opening price, it is a bearish candlestick. Okay, now let's look at the bearish candle or the sell candle. Okay, it is just telling you that this is the highest point. So from my computer I can see that the highest point is one hold on 1.3038. Okay, 1.30385 is the highest point that price went to within this hour, right? And here is the lowest point price went to. I'm looking at the bearish candlestick now, the red candlestick, right? It is the lowest point that price went to, which is 1.28384. Okay, is the lowest that price went to within, throughout the activities that happened within that 1 hour. Okay, but then this is where price started somewhere above. Okay, this is the opening price, right, and then the close price. Price closed at the end of that 1 hour, price was at a point where it was lower than where it opened from. I hope it makes sense now. I believe I want to believe that it makes sense to you. Okay, so price opened somewhere higher, right, and close somewhere lower. Now, don't get confused about the four prices, the four price points. Okay, for a bullish candle, it's only telling you that price started from somewhere here, okay, which is 1.28. I'm just looking at the right hand corner of my screen. So price started at 1.28672, okay. So it is showing us that within the course of this, within the course of that 1 hour, within the course of all the activities that happened within that 1 hour, there was a time when price came all the way down to 1.28331. Okay, there was also a time when price came all the way to 1.30379, but at the end of the day the price still closed somewhere here, which is 1.30169. All right, so at the end of the day the price still closed above the price that it opened with. Okay, market still closed at a price above the price that it opened with. Okay, but for the bearish candle, price closed, you can see price closed below the opening market price. The opening market price is here, the closing market price is here, but along the line, along the course of that 1 hour, there was a time where price hit this point, which is the high, and there was a time where price hit this point, which is the low. Okay, so this is just theoretical example. You will not find all the charts on your screen. You will not find all the candlesticks on your chart this same way. That sometimes you will see something like this, but essentially it's just for you to understand what price is telling you. Okay, if you see a bearish candle like this, it is telling you that, okay, yes, fine, there was a time it actually opened from here, which is the opening price, right? Then it somehow found its way. Sellers were in power, continue to sell all the way down to this place. All right, there was a time where buyers pushed the market up to this place. All right, but at the end of the day the buyers were still successful. The sellers were still in control of the market, and the market ended here. Okay, the market still ended below the opening price. I hope I have not successfully confused you. So let us try that with the bullish candle, right? We just finished talking about the bearish candle. Let's move over to the bullish candle. All right, so even if you see price somewhere, even if you see a bullish candle that is like this, okay, it is only telling you that, yeah, the idea is the same. For a bullish candle, price started from the opening candle somewhere here, okay, down here. All right, so maybe at one point the buyers were in control and pushed the market up onto this place. Okay, but then sellers still managed to pull the price all the way down to this place. Okay, but at the end of that 1 hour trading session, price still ended up somewhere here, right? It is still above the opening price, but it just shows you that there was a time in this 1 hour time frame, or 1 hour market, that the sellers sold the market all the way from this place down. Do you get it? So especially those who have this can affect your trade, because whenever you are seeing market like this, let's assume that it is this. By the way, what this thing is called a wick. All right, so a candlestick has two parts, a body and a wick. This is the body and this is the wick. This is the body and this is the wick. Okay, so you would need the knowledge of this, especially when you are trading and you see that it is a wick, maybe a particular zone, a particular point of interest that you have been monitoring or looking at, or you have been observing that it is the wick. that crossed that zone. Okay, it tells you that, okay, buyers were in control at some point, but at the end of the day, the sellers were still able to push the price down again. The bullish power or the bullish momentum is not as strong, okay, because sellers were still able to push the price down to this point. Okay, so now what another thing you should understand is that for every candlestick that you look at on any time frame, if you scale down to a lesser time frame, you will still see multiple candlesticks that form this big one. Okay, so let's take a very good look at this. So let's take a look at this candle here, this long candle here. I want to use it to make I want to make an illustration here. So I have marked out this long candle that we have seen, that is very obvious on the 4-hour time frame. So if we scale down to, yeah, on the 1-hour time frame rather. So if we scale down to maybe the 5 minutes time frame, okay, you will see every activity that happened within that 1 hour, right? But now they are in 5 minutes time frame each. Okay, so the opening price, I think it's somewhere here. The opening price was somewhere here. Okay, and then there was a time price was down here at 1.31103, right? But at the end of the day, price still closed above the opening price. Remember from our illustration that so you can see where we said for a bullish candle, price would open, all right, somewhere below, but at the end of the day, the market still closed at a price above the opening price. That's essentially the difference between a bullish candlestick and a bearish candlestick, which is what we saw here, right, in this long candlestick. Now take note that sometimes it is not a must that you will see a very obvious wick. Price may have its opening price as the lowest price. That market may actually have the same price as both its opening price and its lowest price. Okay, so it's not a must that you would find every candlestick with a very obvious wick at both sides of the candlestick. It's not a must. Like I said, once you look at a chart, you should be able to interpret what each candle is telling you. All right, so understand that for a bullish candlestick, like I said, the opening price is somewhere below, right? So in this case, in this particular candlestick that you're looking at, the price opened at the same point where it was the lowest. That's the lowest price that's the lowest price that the market went to within that period of time. Okay, so it means that price opened, it is also the lowest price went to, the market went to rather, right? So it bought up to this place, but the sellers were still able to pull down the market until it reached somewhere here, and it closed above the opening price. Okay, so you should be able to interpret. Now let's assume that I have a zone right here. All right, let's assume I have a zone right here, and something like this. Let's assume I have something like this, and I'm waiting for price to come here and break this zone. But then price comes here and breaks this zone with a wick. I'm just giving you like a rough example of how some people use the interpretation of the candlestick to influence whatever decision they make in the market, whether to buy or they sell. Now if I were to be this trader and I come and see that the market is doing something like this, and I'm anticipating that price comes here, right, and closes above this, but then price comes here, gives me just a wick, and then comes back to close here. All right, it is not going to, the decision I would make in this type of scenario may not be exactly the same when the market maybe closes somewhere here. when a bullish candle closes somewhere here. All right, so today's video, like I said, is not about entries or exits. It's just basically about understanding how to read every candlestick. Okay, so let's go back to this example. So this example is a 1 hour time frame, 1 hour time frame, a bullish candle on a 1 hour time frame. So price opened, you can see that this very candlestick here doesn't have its wick is not so far away from the opening price. Okay, but what you should understand is that the opening price, you can see where the opening price is. It is right here. Then there's a little wick right here. You can see a very small wick. So it is just, price is just telling you that the lowest point that price was at this market, right, is very close to the opening price. And then it bought all the way. The buyers were really strong in this market. The buyers were really strong in this market. And even though this is the highest point where price has been, let me take this away. So this is the highest point that price went to, right? But at the end of the day, sellers were able to push the market down to this point. Okay, sellers were able to push the market down to this point. And yes, it is still a very strong bullish candle because the buyers made a lot of buy transactions, right? They made a lot of buy transactions on this market, and they were in control of this market, and price was able to close above the opening price. All right, so opening price, close price, opening price, close price. All right, market went as high as this, sellers brought it down to this point, and at the end of that 1 hour, this was where price closed at. Okay, you can see that where price closed at is also the beginning of the next candlestick that was after it. Price, this was the opening price, this was the lowest point where price came to. Price went as far as this, sellers sold down to this point, and it closed somewhere here. All right, then move over to the next candle, which is a bearish candle. Okay, this is the opening price. Now you can see that in the bullish candlesticks, the opening prices were below the close prices, right? But it's not the same for a bearish candle. So this is the opening price. There was a time buyers tried to push within this 1 hour. Buyers tried to push the market up to this point. I hope I'm not using my cursor tool. Up to this point, right? But then again, sellers dropped the market down to this point. They couldn't continue selling before the buyers took it up again, and the price closed, market closed somewhere at 1.3190. Okay, 1 point. So within this candlestick, you will see a lot of buy and sell candles. If you scale down to the lower time frame, would you be able to see every other activity? Because price is just telling you everything. There's nothing to hide. Price is telling you every single thing that has transpired before you came to the market. Okay, so you can see, let's take this other example again. This one right here is a bullish candle. Pardon me, it's a bullish candle. Price opened here. It is not so far away from the opening price, is not so far away from the lowest price that the market went to, right? The buyers bought up to this point, sellers still pushed the market down to this point, and then it closed there. Okay, so again, a bullish candle, the closing price closed above the opening price. Okay, so now in cases like I think this is a doji, right? It is showing you that yes, this, I'm talking about this very candlestick right here. I'm talking about this very candlestick, this small doji candlestick right here. Let me make that a bit bolder. This doji right here. It's not difficult to understand. It's just telling you that within the course of that 1 hour, both buyers and sellers were really in control of the market. Same way the buyers were struggling was the same way the sellers were struggling, and at the end of the day, sellers managed to still sell and take control of the market, but not by a wide margin, right? Which is why the body of the candle is not as large. Okay, it's showing you that at the end of the day, the sellers were in control of the market, but not by a large margin. All right. So there are people, for instance, like this doji you are seeing here, some people would take this as a signal that the market is not really ready to do any movement, and some will just wait until they see, in this case they see a bullish candle like this engulfing this bearish candle. They can now say, okay, I want to buy. Okay, but again, like I said, that's not the essence of this video. It's just for you to understand how to interpret what you are seeing for every single candlestick that you see, whether on the 1 hour time frame, 5 minutes time frame, 1 minute time frame, one day daily time frame, weekly time frame, any time frame. As long as you look at the candlestick, you should be able to interpret what it is saying. Then use that, whatever you have found out, and be able to analyze the market to know if you would be going in for a buy or if you would be going in for a sell. I hope this is well explained. If you have any questions, please put that in the comment section. Thank you so much for staying to the end of this video. If you have any questions, like I said, drop it in the comment section. Give this video a like, subscribe to my channel, and turn on post notifications so that you would encourage our channel and be the first to be notified whenever a new video is up. If you'd like to learn more about forex trading, click on this next video and I'll see you in the next one. Bye bye.